It's almost the last time. Je suis désolé de vous déranger pour encore quelques instants. Again, my offer still stands for those people that are less comfortable with la langue de Montréal, Molière, à Montréal. We do have those headsets with simultaneous translation. Now, it's my privilege to introduce our keynote speaker, Tony Gravelle. Tony Gravelle est sous-gouverneur à la Banque du Canada depuis 2019, mais je vous rassure, ça fait beaucoup plus longtemps que ça qu'il travaille à la Banque du Canada. Et ce qui est particulièrement intéressant pour vous aujourd'hui, il supervise les activités des institutions relatives au système financier au Canada et participe bien évidemment aussi à la formulation de la politique monétaire. If I was to dream about a keynote speaker in the context of bank turmoil, I can't think of a better speaker than Tony Gravelle to have today. So some question even ask us if National Bank provoked the financial stress in the U.S. in order to get Tony. No, it was planned well before that. Donc, Tony, encore une fois, une expérience extraordinaire à la Banque du Canada, avec un discours de 25 minutes qui sera particulièrement intéressant. Et je reviens vous voir, écoutez, surprise, il y a une période de questions aussi à la suite du discours de Tony, donc préparez-vous. Tony est prêt à faire face à la musique aussi. Tony Gravelle, merci.
Give me a second while I get myself set up. Holy moly. I'm a little bit stuffed. I got COVID a couple of weeks ago, my first time. And anyway, I'm happy to see some familiar faces as well. I know a chunk of you guys in the room. Anyway, good afternoon. Bonjour et merci de m'avoir invité pour parler des mesures prises par la Banque du Canada au début de la pandémie COVID-19 afin d'assurer la liquidité et le bon fonctionnement du système financier. On vous avait promis qu'on en parlerait et c'est ce que je compte faire aujourd'hui. Mais dans un discours sur la liquidité des marchés, je me voudrais de ne pas parler d'abord de l'agitation récente dans le système bancaire américain et d'outre-mer. Alors, je vais vous donner brièvement notre point de vue. In the U.S., the collapse of Silicon Valley Bank and Signature Bank on the same weekend revealed how the combination of large and concentrated uninsured depositor base and falling asset values can generate bank runs. American authorities responded by taking control of both banks and extended extraordinary support to their depositors. And the Federal Reserve stepped in with a new term funding facility for banks requiring liquidity support. Shortly thereafter, we had Credit Suisse come under severe market pressure, and the Swiss authorities facilitated its takeover by UBS. This ensured continuity of operations for Credit Suisse's clients and counterparties. While these events introduced stress in the financial system, markets are functioning. Global banks are more resilient today than they were 15 years ago at the outset of the global financial crisis, or GFC. Post-GFC reforms required global banks to substantially increase their capital and liquidity buffers. This has made the system safer and better able to withstand stress. In Canada, our banking system has a well-earned international reputation for stability. This reflects the structure of our system, together with sound risk management in our financial institutions and robust regulation and supervision. Canadian banks weathered the GFC well. And since then, the resilience has been further strengthened with the implementation of new, higher global standards. But now, we're not immune to spillovers from what's happening elsewhere in the world. We all know that. The global financial system is highly integrated, so when stresses arise outside of Canada, they can negatively affect things here at home. The bank's mandate to promote the stability of the Canadian financial system means that we're ready to act in the event of a severe market-wide stress and provide liquidity support. We did so during the 2008 global financial crisis, and we did so again during the market disruptions that occurred at the outset of the COVID-19 pandemic. Comme je viens de dire en anglais, on est prêt à intervenir s'il y a des tensions graves et généralisées et à fournir des liquidités en soutien du système financier. On l'a fait lors de la crise financière mondiale de 2008 et on est intervenu de nouveau pendant les graves perturbations des marchés au début de la pandémie de COVID-19. On a ajusté nos mécanismes exceptionnels d'octroi de liquidité en fonction des leçons qu'on a tirées de nos interventions durant la crise financière mondiale. De la même façon, l'examen de nos interventions durant la pandémie va nous permettre d'améliorer et de mieux cibler nos réponses advenant à un autre épisode de turbulence sur les marchés. Je vais maintenant passer au sujet principal, les leçons tirées de la pandémie de COVID-19 et ce qu'on peut attendre de la banque si on devait encore faire face à des graves tensions sur le système financier. Comme on s'en souvient, il y a presque exactement 3 ans, la propagation rapide d'un nouveau virus a paralysé la planète. Une grande partie de l'économie a été mise à l'arrêt et les marchés financiers mondiaux ont connu des perturbations encore jamais vues. Cette situation a créé un vent de panique chez les entreprises et les ménages qui s'inquiétaient d'être sans revenus pendant des mois. De l'autre côté, les marchés faisaient face à des risques financiers en forte augmentation. Comme on craignait tous une catastrophe économique et financière, il y a eu une ruée vers les liquidités, a dash for cash. Ce mouvement de panique a entraîné un grave dysfonctionnement de l'ensemble des marchés financiers ainsi que de sérieuses distorsions. Des participants de tous les horizons en recherche de liquidités vendaient massivement leurs titres d'emprunt. Les liquidités se sont ainsi presque entièrement évaporées de jour au lendemain de tous les marchés de titres à revenus fixes. La banque a alors réagi avec vigueur et rapidité en mettant en place divers programmes pour rétablir le fonctionnement des marchés. We intervened aggressively across a range of markets, launching 10 liquidity facilities and programs, 9 of which were new for us. We have recently reviewed the effectiveness of the programs we rolled out. In fact, we've just published a paper with our findings today, and the author's sitting right there, Graham Johnson. While I'm not going to go through the entirety of our analysis here today, I'd like to take some time now to discuss the 2 largest programs, the Extended Term Repo Operations and the Government Canada Bond Purchase Program, or GBBP. Term Repo is our workhorse liquidity facility, and we came into the pandemic with a well-developed playbook for this program. Let me explain in a bit more detail. In times of relative market stability, our regular term repo operations are aimed at managing our balance sheet. In times of crisis, we use extended term repos to support market functioning. Our go-to game plan to relieve severe market dysfunction focuses on providing collateralized lending in the form of repos to banks. We then rely on the banks to pass this funding into the broader financial system, including to institutional asset managers who are active in and rely on repo markets. We must also remember that these banks play an active role as market makers in a range of securities, including Government Canada bonds. So, by easing access to funding, our extended term repos would help support active trading in these securities along with market functioning more generally. In times of crisis, extended term repos are held more often and for larger amounts than our regular term repos. And if a market-wide stress event is severe, the length of their maturities can also be expanded. Through these extended term repos, we lent roughly $210 billion to financial institutions from March to June of 2020. Very short-term horizon. We also relaxed the restrictions on collateral eligibility to ensure that these actions would have their intended effect. All this helped stave off some of the pandemic's worst financial effects. Contrairement à notre programme d'opération des pensions à plus d'un jour, le programme d'achat d'obligations du gouvernement du Canada était complètement nouveau pour nous en 2020. Durant la pandémie, on a utilisé ce programme de deux façons distinctes. D'abord, comme outil de soutien au fonctionnement des marchés, puis comme outil de politique monétaire. Je vais vous parler surtout de la façon dont on l'a utilisé pour améliorer le fonctionnement des marchés. Pour mettre les choses en contexte, c'est très rare que le marché de titres du gouvernement du Canada soit paralysé en période de tension financière. Comme dans la plupart des crises de liquidité, durant la crise financière mondiale, on a assisté à une ruée vers les titres de qualité. Les participants au marché se précipitaient pour acheter des obligations du gouvernement du Canada. Ces obligations deviennent des placements refuges. Le prix peut fluctuer fortement, mais en général, ce marché n'est pas une source de tension systémique. Mais, durant les premiers jours de la pandémie, les tensions financières étaient fortes et sans précédent. Ainsi, les investisseurs cherchaient désespérément à vendre même les obligations du gouvernement du Canada sans pour autant trouver des acheteurs. La liquidité s'était complètement évaporée. C'est pourquoi, au début de la pandémie, la Banque a eu recours au programme d'achat d'obligations comme outil pour favoriser le fonctionnement des marchés. Si on utilise ce programme de nouveau dans l'avenir, on va tenir compte des leçons prises. Je vais vous parler de certaines de ces leçons. Premièrement, si notre intention est d'acheter des obligations du gouvernement du Canada pour restaurer le fonctionnement du marché, on va l'indiquer clairement dès le départ pour qu'il n'y ait pas d'ambiguïté. On va faire savoir de façon très claire que le programme vise à soutenir le fonctionnement des marchés et qu'il n'est pas censé être un outil de politique monétaire. Si notre objectif de fonctionnement des marchés n'est pas parfaitement clair, il pourrait y avoir de la spéculation sur les mesures de politique monétaire. C'est particulièrement important dans des périodes où la Banque resserre activement la politique monétaire. Second lesson. The program's scale and scope would be graduated and tied to market conditions. And much like with our extended term repo operations, the purchase program would be temporary, running for a preset and relatively short period of time. Third, given the purchases are aimed at healing market dysfunction, we would look to purchase GOC bonds at something like backstop pricing. That means we would not be trying to raise bond prices or push down yields. Rather, we would purchase them at prices and in amounts that encourage private sector participants to return to the market. This approach would help mitigate moral hazard, and I'll come back to moral hazard in a moment. Finally, once conditions improved and market functioning returned to normal, we would look to sell the GOC bonds we had purchased. By selling those bonds soon after market function normalized, we would be able to get our balance sheet back to its pre-event size relatively quickly. This would minimize any unintended impact on monetary policy. These are some of the lessons we're taking away from the use of extraordinary programs during the pandemic. And I want to be clear, the bar is very high for us to use large-scale GOC bond purchases to support market functioning again. There are a few reasons for this. As I noted a moment ago, in most cases, we expect our standard emergency lending operations, like extended term repo, to do the trick in terms of easing bond market liquidity issues. When we lend large amounts of liquidity to banks through term repos, they seek to pass on much of this additional liquidity to the broader financial system. However, there is a view that this broader non-bank financial intermediary sector has grown quite large. In this case, on-lending alone would not be enough to prevent market liquidity and GOC bond trading from drying up. There could be a need for the Bank of Canada to step in. To this, I would like to point out our contingent term repo facility, or CTRF. This facility allows us to provide liquidity directly beyond our traditional bank counterparties to asset managers, including pension funds. This would likely be useful if we were ever faced with an event like the pension fund-related stresses in the UK gilt market. If a similar situation arose in Canada, the CTRF could serve to reduce the need for the bank to conduct outright GOC bond purchases. This is because pension funds would have access to the liquidity they need to meet margin calls. However, if we were faced with another extreme event that caused severe dysfunction in the GOC bond market and for which our other emergency tools were not working, we may well be in a break-the-glass situation. And in this case, we may well resort to GOC bond purchases to restore market functioning. Comme je viens de dire en anglais, si le marché d'obligations était bouleversé par un autre événement extrême et que nos autres outils d'urgence étaient inefficaces, on pourrait bien se trouver dans une situation de dernier recours. Dans ce cas, on pourrait se tourner vers les achats d'obligations du gouvernement du Canada pour rétablir le fonctionnement des marchés. Voilà que fait le tour de l'aspect fonctionnement des marchés du programme d'achat d'obligations. Je vais maintenant passer à l'aspect politique monétaire du programme. Mais avant, je veux parler d'un concept important dans le contexte des mesures sans précédent prises au cours des 3 dernières années, l'aléa morale. L'aléa morale apparaît quand les investisseurs ou les participants du marché sentent qu'ils peuvent prendre des risques inhabituels sans qu'il y ait de conséquences si les choses tournent mal. Autrement dit, parce que la Banque centrale est déjà intervenue une fois, on s'attend à ce qu'elle intervienne encore au moindre signe de tension sur les marchés. On prend l'aléa morale très au sérieux. Donc, si on doit intervenir de nouveau, on va chercher à réduire cette aléa morale. Premièrement, on va fournir des liquidités à titre exceptionnel, comme durant la pandémie, seulement dans des situations extrêmes où le système financier au complet fait face à des contraintes de financement. Deuxièmement, on va intégrer des prix dissuasifs à nos mesures exceptionnelles, dans la mesure du possible, pour rendre le programme peu attrayant quand les conditions financières sont plus favorables. Et troisièmement, si ce n'est pas possible d'appliquer des prix dissuasifs, on va s'assurer que nos programmes sont bien structurés du point de vue de la taille et de la durée. On va fixer d'avance leur durée, disons d'1 à 3 mois, pour qu'il soit clair que les mesures sont temporaires. Je vais maintenant parler de l'aspect politique monétaire du programme d'achat d'obligations du gouvernement Canada. In the summer of 2020, after markets had recovered from the initial shock, we announced a shift in the focus of the GBP to monetary policy function. Most of you know this as quantitative easing, or QE. Its purpose is to help the bank achieve its 2% target when inflation is below target or negative, and our policy rate is already as low as it can go. How does this work? Well, when our policy interest rate is at the effective lower bound of 25 basis points, QE helps lower interest rates out along the yield curve. These lower interest rates support lending to households and businesses, as well as economic growth more generally. We have more work to do to fully assess the use of the GBP as a monetary policy tool during the pandemic. But while this work is ongoing, we have identified a few lessons learned so far. In retrospect, we should have explained the shift in the program's objective more clearly to the public and market participants. As well, the transition from market functioning to monetary policy objective would likely be a good time to consider recalibrating the scope of the program, as well as to modify its structure and scale. The pandemic was the first time in our history that we used QE. In the future, we may once again face a macroeconomic situation where our policy rate is at the effective lower bound. In this type of exceptional circumstance, we may need to use our extended toolkit to provide additional monetary policy stimulus. This brings us to the present day, so I'll turn now to something more current. The actions we took during the pandemic boosted our GOC bond holdings to roughly $440 billion at its peak. We are now working to normalize our balance sheet through quantitative tightening, what we call QT. And when we began QT roughly a year ago, we also said that we had decided to implement monetary policy using a floor system on a permanent basis. Il est important de comprendre que la quantité de solde de règlement ou réserve qu'il faut pour fonctionner dans un système de valeur plancher dépasse le niveau à long terme demandé par le secteur bancaire. Vous vous demandez peut-être quel est alors le niveau idéal. Il n'y a pas encore de réponse définitive. On sait qu'il se trouve nettement en dessous du niveau actuel d'environ 200 milliards de dollars. Selon nos meilleures estimations, il se situe quelque part entre 20 et 60 milliards de dollars, ou environ 1 à 2 du produit intérieur brut du Canada. En comparaison, pour la Réserve fédérale américaine, le niveau de réserve nécessaire a été estimé récemment autour de 10 à 13 du PIB américain. Ça signifie que le resserrement quantitatif arrivera à terme quand nos soldes de règlement aura atteint cette fourchette de 20 à 60 milliards de dollars. À ce moment-là, la banque va recommencer à acheter des actifs dans le cadre de son processus normal de la gestion du bilan. Comme notre estimation du niveau de réserve nécessaire est incertain, on va surveiller les conditions de financement à court terme à mesure que nos soldes de règlement vont baisser. Et selon qu'on va observer, on pourra devoir réviser notre estimation du niveau requis pour mettre en œuvre la politique monétaire dans un système de valeur plancher. Par exemple, si on voit une pression à la hausse persistante sur le taux des opérations de pension à un jour et que les soldes de règlement ne sont pas encore au niveau stable estimé, ça pourrait vouloir dire que notre estimation était trop basse. Pour ce qui est de savoir quand le resserrement quantitatif va se terminer, ça serait probablement vers la fin de 2024 ou la première moitié de 2025. Cette prévision est basée sur la structure des échéances de notre portefeuille d'obligations et sur l'estimation du profil de notre portefeuille à l'équilibre. Le moment pourra changer légèrement à mesure que la taille des autres portions de notre bilan, comme les dépôts du gouvernement ou la monnaie en circulation, varie au fil du temps. It's important to remember that we are still working to bring aggregate supply and demand back into balance. Our main tool for doing this is our policy interest rate, which we have increased from 25 basis points to 450 basis points in less than a year. But our balance sheet must continue to normalize to remove the support it provides to monetary policy. Quantitative tightening is happening, but it will take some time to run its course. It's time for me to wrap up. Thank God. The COVID pandemic was certainly unprecedented, and it merited a strong response to the bank. Let me reemphasize that this level and type of intervention should not be expected with every episode of market turbulence in the future. As well, we will do some things differently next time if the need arises. This includes putting in place measures to further mitigate moral hazard. After the global financial crisis, we learned a lot by carefully reviewing the effectiveness of our response. That work helped inform our response to the pandemic, just as the work we are doing now will help us respond better to future crises. It's important that we remain nimble in response to uncertain times we're in. In the past month alone, we've seen important developments. The risk appetite in global markets has pulled back, in part reflecting the increased stress in global banking that I noted at the beginning of my speech. And headline inflation has dropped. At the same time, the labor market in Canada remains tight. This is putting upward pressure on services prices. We continue to expect CPI inflation to come down in the months ahead, but we need to see further slowing of core inflation in order to get back sustainably to the 2% target. We're also keeping a close eye on stresses to global banking systems as we turn our attention to the April monetary policy report. We will consider the macroeconomic impact of this evolving situation as we put together our next projection. We'll be looking for example at potential spillovers into the real economy to the extent that credit conditions tighten and there are broader confidence effects coming from the banking stresses. To conclude, we will continue learning from our actions and make improvements to our market liquidity frameworks in support of Canadians' economic and financial well-being. Comme je viens de dire en anglais, on va continuer à apprendre de nos actions et à améliorer nos cadres d'octroi de liquidité pour favoriser le bien-être économique et financier des Canadiens. Et merci, and I'm happy to take questions.
Merci Tony. Tony va rester ici. Before lunch, he entrusted me with the fact that he likes to get warmed up before a Q&A. So I said, fine, I'll find you a decent sparring partner. So who better to ask than Warren Lovely, our own interest rate strategist, one of the best on the street, by the way. So the plan is Warren will spar with Tony for a couple questions, and after that, feel free. We will have people in the room with a mic, so just raise your hands, and I'll see you, and we'll get the mic, and Tony and Warren will do the rest of the job. Merci.
Thanks, Stefan. And I think more importantly, thank you, Tony, for that. Coming into today, I had a few ideas for things that we could talk about, but you've certainly given us a lot to digest. I think objectively, you've given some of the more important market functioning talks really since the pandemic has hit. Today is no different. Lot to unpack, including perhaps fresh paper from Graham, which many of us, I think, will be dashing back to read this afternoon. So I wanted to start with, and I don't want to guide you here too much, but what might be a quick answer to hopefully an easy question. You mentioned, of course, what we're seeing in global financial markets, particularly the US banking system. You mentioned that you're monitoring the current situation closely, you're ready to act if necessary. We're not immune to spillover. So can you give us some sense, how nervous are you right now with what we're seeing in the US, and where is the bar to act in terms of our own financial system?
Sure. I'll touch upon a few things I had in the speech, but of course, the events in the U.S., but actually more importantly, the Credit Suisse takeover by UBS was a bit more of a kind of a wake-up call and just polishing off our contingency plans, our facilities. We always keep them at the ready. We're a central bank, and a central bank stands ready to be a lender of last resort at all times. So for sure, a lot of the financial sector authorities kind of put all the contingency plans and just brushed them off, and we had a lot of discussions internationally and domestically as well. But like I said in the speech, we haven't seen any of those stresses in terms of funding market stresses in Canada at all. Like I said, the Canadian banking sector is in a quite different place than the regional banks in the U.S. For sure. All Canadian FERFIs are under Basel III, which is not the case for all banks in the U.S. So there's quite a bit of difference, but just in terms of our current assessment, although we're keeping a close eye, we don't feel we're anywhere close to being concerned in terms of financial system stress.
Okay, so soothing words.
Yeah.
Okay, so I think maybe following on that, and I don't want to monopolize the time too much here. We have a bit of a countdown here, so I'll definitely keep an eye on this and with a view to inviting anyone in the room that has a question to participate. But following on from this, we do things a little bit differently in this country, I think, is what we've learned in our banking sector. And from a monetary policy perspective, we've also been doing things a little bit differently and maybe moving a bit quicker than some, you might say. And you discussed in detail the bond purchase program and now this new era of QT that really, you initiated some time ago. I'm wondering if you touched on lessons learned, but maybe lessons learned from this initial phase of quantitative tightening seemingly has gone so far so good. Maybe you could give us some perspective on why you think that has been the case. Maybe if you share that view, why it would be the case, and what are the things we need to watch out for now going forward, because we do have this continued passive runoff ahead of us.
Yeah, okay, so I might not answer your question directly. I might come around it to some extent, but I mean, what I wanted to say in the speech is that we learned a lot of lessons related to our liquidity injections that we did during the early days of the pandemic, how we do them differently. We have a bunch of repo-related or short-term funding facilities that we had in place. We also had the Government Canada bond purchase program that we put in place, and those lessons were related to how we would do those differently going forward. We'd be very clearly identifying when we'd be rolling out bond purchases for market functioning versus identifying bond purchases for monetary policy. That's one of the lessons learned. For example, in terms of QT, I did mention in the speech that if we were ever to do Government of Canada bond purchases for market functioning reasons, similar to what the BOE did in the UK, there's a one-off event, and that our other tools weren't working to offset that stress. And it was, and like I said, if those Government of Canada bond purchases were only aimed at market functioning, we would turn around and sell those bonds shortly after markets went back to normal, if you will. The QT we're doing now was, in large part, we switched to monetary policy objective of QT July of 2020. So the QT we did was actually for monetary policy reasons. That's not the same situation. I mean, we could have decided that we wanted to sell them as part of monetary policy, but it would be because we were in the belief that for whatever reason that our main tool, our policy interest rate, was not sufficient in terms of tightening financial monetary policy. So we took a decision that we think QT can run in the background in a very mechanistic way in terms of unwinding our monetary policy impulse that we had put in place with QE. So QT is just some sort of slow unwind, and we have a sufficiently important tool in terms of policy rate to do any adjustments we need in terms of the stance of monetary policy.
Great, and I gather just from your remarks that we've now received some important guidance from the bank in terms of where, the appropriate time frame for that QT to end, pursuant to settlement balances and so on. Okay, moving on, I think it's obviously fair to say that it wasn't just Government of Canada bonds that the Bank of Canada purchased. We've had other securities that were on the radar screen. You outlined some of the programs. I'm curious how, and you mentioned today this potential facility for our pension plans, our pension funds. How are you thinking about other sectors of the market? Again, we don't necessarily see flares of distress going up, but we had provincial bonds and other securities that fell under purchase facilities previously. Are these things that, again, you stand ready to utilize in the future should market functioning pressures arise?
Again, so we expect our other tools like extended term repo to do the trick. So our go-to would be those liquidity injection tools. We'd flood the system, the banking system, with liquidity. We presume that liquidity, that additional liquidity would be sufficient that the banks themselves find it advantageous for them to on-lend that liquidity. That should do a lot of the heavy lifting in terms of a financial stress. If, for whatever reason, those activities, our usual go-to tools in terms of injecting liquidity, didn't work for specific markets, and they were deemed important at the time for the functioning of the financial system, we would do what we needed to do. The bar, I said the bar was really high for us to go in and do Government of Canada bond purchases because we want to make that clear for market functioning reasons. The bar is even higher to go into those other markets for market functioning because if you understand the Canadian financial system, you guys all know this, is that the fixed income markets are based on GOC bond prices, the yield curve that's derived from that. It's really important for us to make sure that yield curve is functioning well. So that is a core market that we go in. So the pandemic was so unique. I think I can't think of a situation where we'd go straight past Government of Canada bonds for market functioning reasons. For monetary policy reasons, there could be a different situation. You can think that credit intermediation is not working well, and yields are gone. So QE might have pushed down yields along the yield curve, but if we needed to resort to credit intermediation or credit easing, if you will, CE, there might be reasons for us to go into other markets, for example, corporate bond markets. But for market functioning, I think it is an extremely, extremely high bar for us to go in in a non-GOC bond market.
Okay, well, I don't really want to monopolize the time entirely, so
I think
we
he's
do
warmed
have...
up, eh?
Yeah, I think
Ok,
we're
il y avait
warmed up.
chauffé.
I think we're good to go.
Yeah, on a une dizaine de minutes pour des questions, si vous voulez. So 10 minutes of Q&As. Just raise your hands and we'll get a mic to you. And if not, Warren will continue to spar with him.
Well, maybe while people are thinking about their questions, Tony, maybe we'll just take a quick little segue, if we could, away from what's really been a fascinating speech and a market functioning focused speech. But just more generally from a monetary policy perspective, you in your concluding remarks there, you touched on sort of the current conditions that you're monitoring. Might be appropriate just to come back to this in terms of how the bank is currently assessing conditions in the economy and so on. I know one particular issue that's been quite topical of late has been the sort of the demographic renaissance that we have happening in this country. Population gains, more specifically immigration-fueled population gains. We often put a housing lens on this, what all those new Canadians mean in terms of supporting housing demand. I saw my colleague Stefan just earlier this week invoking population growth with a view to what it might mean for deposit growth, another quite topical issue. Maybe you can give us some perspective on how the Bank of Canada is thinking about population growth, immigration, labor force growth is really where I'm thinking you might go with this, and how it might be impacting your thinking on our potential rate of growth in this country.
Yeah, we did touch upon it in our last NPR in January, a little bit of that. And every April, we update our assessment of potential output. We do this annual big assessment. The last few years, we've been doing a few more assessments in between because of the supply constraints and the logistical issues. We're trying to get a handle on supply. But so we will be updating our assessment of potential output again in April, kind of a major revamp. So part of potential output, one of the key ingredients to potential output is total labor input. So this is where workforce growth does play a role in a big way. And of course, what happens when you have a huge increase in the workforce, either via higher participation rates, what we have seen in some sort of categories of the labor force, women in particular, women with young children in particular, and in immigration, it has the impact of enhancing potential output, it increases potential output. So we've seen the new million number in terms of immigration, and actually it's actually spiked up near the end of the year, 2022, even more so. So we'll be taking that on, and it has the potential to increase potential output, just to be clear. But it's kind of immigration is a funny two-edged sword in terms of what it means for bringing demand back into balance with supply. All those new immigrants, those new people to Canada also demand things. They provide, they consume. So it has an impact on aggregate demand. At the same time, it has an impact on aggregate supply. So what it means for the output gap or the balance between demand and supply is not clear, really. It's kind of a double-edged sword. It does relax the potential tightness in labor markets. That's clear. So we'll see how that plays out. So we had done, we're going to be bringing some analysis in on looking at a little more closely at the labor market and looking at whether the balance between demand for labor and that new supply of labor that's coming from immigration and temporary foreign workers. So we'll have a bit more analysis there.
So more to come.
More to come in 2 weeks, 2.5 weeks.
All right. Another offer for questions in the room here.
Monsieur Letko, est-ce que vous voulez attendre un micro, s'il vous plaît? Monsieur Letko, juste le micro.
I'm going to start this by saying I'm a little remiss because I'm not perfectly up to date, but there's a booklet that you would put out quarterly, I think it is. And in the last few years, you often talked about rates or normalizing rates. And I'm just wondering whether you feel that has now occurred.
So the context, I mean, it's a bit dated, that context, but when we were at 25 basis points, for example, when our policy rate was at 25 basis points, we were talking about normalizing rates back to normal levels. There's a range around that, but we usually call it the neutral interest rate. So normalizing rates would have been moving it back up to something around 2.5%, for example. But now normalizing rates would be a different context. Hopefully over time, if inflation does follow the path we projected in the January NPR, there will be a time in the later part of the projection that we might need to normalize rates in the other direction from high levels towards lower levels. But at this stage, it's way too early to talk about the normalization coming down part, given the current context that we are in terms of high inflation and not being anywhere near close to our 2% inflation target.
Monsieur Letko a brisé la glace. Est-ce qu'il y a d'autres gens qui sont prêts à poser des questions? Ah. Maya, juste derrière Monsieur Letko.
So we talk a lot about lags in terms of rates for them to touch the economy or to have the full effect on the economy. In the case of Canada, hypothetically, if we say we stay at this current level, what is the most time that the lag will be in full effect and the full impact of the tightening will be taken by the Canadian economy?
Okay. So that's basically a question about the monetary policy transmission. Of course, tightening or loosening takes time to flow through the economy. We've seen certain sectors that are more interest rate sensitive, like housing, have a reaction to higher interest rates much more quickly than other sectors. Other sectors will take much longer for that to happen. Typically, when we look at the monetary policy transmission, we look at it at the level of our projection, which is usually a kind of a 2-year horizon. And we adjust rates based on what we see over that two-year horizon related to the inflation path. So our judgment was that the amount of tightening that we required to get inflation back down to 2% was, and you can see it, we're at 450 basis points there. There's always, and as you tighten and as you try to get inflation back down, there's new shocks that hit the economy all the time. Some are positive, some are negative. So it's an ever-evolving kind of understanding of how much impact or how much impact those higher rates have on the economy, and it evolves over time. We said we took a pause. Conditional pause, again. But the reason why we paused the hikes in the rates is actually we want to accumulate data, in a sense. We want to accumulate our understanding of how much of that more restrictive policy stance is flowing through the economy. We've seen it hit housing really quickly, but there's still to come. There's still more stuff to come, and we want to see if our assessment, our expectations, our projection, if you will, are going to line up, and the data that comes in lines up with that projection. So we're assessing at this point. We said it was conditional because our concern is that at these high levels, we have more concern for any positive shock that increases aggregate demand or growth, and that we have a more heightened concern for that. So to the extent we've seen data coming in that actually comes in more hotter or more positive for growth, we'd react more touchy, if you will, or more to that than we would for a series of shock that reduce aggregate supply or aggregate demand. Sorry.
Il reste encore un gros 3 minutes.
We're in the red zone here,
Red zone.
But still an opportunity for a question here for Tony.
As we await a question, can I throw a beach ball at you, Tony?
All right,
Un ballon de
sounds like
plage.
fun.
When you assess global energy transition, everybody's doing it at the same time. Do central banks perceive global energy transition as being inflationary or deflationary? How do you see it? La question sur la transition énergétique mondiale, est-ce que c'est un concept que les banques centrales évaluent comme étant Inflationniste, déflationniste ou autre chose?
I can do it in English. Well, really, these are one of the things, some of the stuff we look at in terms of structural changes to the economy, and we do look at it in that context of structural changes, where you could argue that, for example, that backdrop, in a sense, might require a setting of monetary policy that might be tighter on average over the future horizons if it was structurally that way. In a sense, means like the equivalent kind of assessment would be if potential output was lower than we thought based on that. Again, we'll have a new assessment of potential output coming in. We haven't done a lot of work on the energy. To be frank, we haven't done a lot of the structural work we plan to do on energy transition, but that would be kind of it would flow through our potential output assessment if once we get to it, if you will.
60 seconds. If not, Warren, you'll have to sneak one in.
I got one last question
Okay.
for you, Tony, and maybe, again, it'll be deliberately a brief answer. I'm not going to ask you your opinion on the federal budget. It's not even 24 hours old yet. But the general, broad fiscal policy in this country, wondering how much the Bank of Canada is not concerned by, but how much this is influencing your thinking in terms of the fiscal impulse we're seeing in various levels of government. We know there's pressures to respond to vulnerable sectors of the community. There's cost of living pressures. There's energy transition. It requires investment and so on. Some stuff that governments are doing. How much is that influencing the bank's current thinking? And then the quick follow-up, because I think I know the answer to that one, the quick follow-up would be, how much is the government's bond program and the supply intersecting with your thinking on the balance sheet runoff?
So on the first one, on fiscal, I mean, we take all of fiscal, including provincial fiscal impulses, as given when we do our projections. So we just got the federal one yesterday. We'll do the adding up and plug it into our projection, and it spits out whatever it does spit out. So we just take that as given. We don't have a view. I mean, we do have to, the reason why I don't want to answer too quickly also is that we do have to do some assessment work, because there are some parts of the fiscal, like infrastructure investments, anything that helps infrastructure investment might help increase potential output. So it's not as straightforward in some cases. And of course, there's also some of it that's delayed and later on. So it's not an easy assessment, but we will do that, and we'll just take it as given after we do that calculation. In terms of the bond program, to tell you the truth, in a sense, we just take that as given as well too. I mean, to the extent that it's changes at the margin, we don't think it does have an impact on the way monetary policy is transmitted across the yield curve that much. It has to be quite much more substantial. There's a lot of other factors like the banking stresses that we saw in the United States and in Europe that would have probably a much more important impact on the yield curve than relatively modest changes in the bond program that we're seeing at least announced. So we worry more about those things where there's big macroeconomic or financial stability impacts on yield curves across the globe. That's usually a bigger driver.
On those words, Tony, Warren, merci beaucoup pour votre présentation ce midi et vos questions.
OK, merci.
Thank you.